The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 28th fantastic Friday edition of the Nadex Bull Bear Binary Option Hour with your hosts Darrell Martin and Steve Rhodes. Folks, we are grateful for your presence here today, and our outcome is to teach you how to set it and forget it. You know, the most important aspect of trading is capital preservation, and that is the real beauty of the Nadex platform, because your trade is your stop. That means your risk. Well, it's simply your risk out there. Your stops are automatic, and the market can never gap you out of your trade. That is a beautiful thing. That is a beautiful thing. Nadex is a better way to trade. And our man, Darrell Martin, he is our Nadex expert. Our call number is 877-927-6648, and we would love to field your calls. Darrell Martin, how you doing out there? Uh-oh. Darrell's having problems. Oh, we had this last time. Oh, I got all this great, beautiful introduction, and then boom. Well, in any event, folks, let's start off with a beautiful thought anyways. I love this one. Live life fully while you're here. Experience everything. Take care of yourself and your friends. Have fun. Be crazy. Be weird. Go out and screw up. You're going to anyway, so you might as well enjoy that process. Take the opportunity to learn from your mistakes. Find the cause of your problems and eliminate. Don't try to be perfect. Perfection, folks, that is the lowest standard out there. Just simply be extraordinary, and be an extraordinary example of being a human being. You know, you're a human being, not a human doing out there. If one of your mistakes in trading is using stops, and learn the Nadex platform, because you do set it and forget it, as good old Ron Popeil used to say. And there's no one better than Darrell Martin that can teach you how. He does that each and every day from 1 to 2 p.m. here at TFNN.com. Let's go check out these markets here. Right now, we've got interesting markets, to say the least. You've got the Dow off 124 points. IBM really pulling that thing down. S&P off 10, trading at 1602. Composite off 16 points. Out at 33.85. Russell 2000 off 4.5 at 9.75. And you've got Google off $2, Apple down 2.5, Microsoft off 6 pennies out here. Biogen having a nice morning, up $9.70. PetroChina up 4%, up $4 and change. Arkansas Best up 266. X1, one of the 3D companies, they're up 242. Arkansas Best up 13%. Accenture just getting hammered this morning. They're down about a little over $10. BlackRock off $6 and change. IBM off $6. AZZ, and their name is AZZ Inc., off $6. And our call number is 877-927-6648. In the market here, the commodity market, you've got gold off $21 at $11.91. Silver holding up. That's trading up 20 cents at $18.73. Light sweet crude back a bit, off 27 pennies. Over in Europe here right now, you've got the DAX is off 69, and the FTSE is down only 29 points out here. Our call number again, 877-927-6648. First, we're going to go over to the futures markets. I want to just take a look at what's going on out here. We're taking a look at that 30-minute futures contract. And this morning here, if you didn't catch the 9 o'clock show, go back. You can listen to the archive of that. That is on Channel 9. What we were identifying out here, number one, we had a real nice Gartley sell pattern. You had a 0.618 retracement and a 2.618 expansion of your B2C swing point. So that was a beautiful thing. And then the market had also gotten itself into that extreme overbought condition, and it decided to work its way off by just simply traveling sideways. Now, the majority of the time, the high probability is that these consolidations will resolve themselves to the upside. You just never know. But one thing is for sure, when they do resolve themselves, they're going to move in a amount equal to or greater than the correction. So sideways moves are actually very, very cool. You know, I've spoken to a number of people that have had problems in trading the market, you know, in a system that they trade when a market is not trending in one direction or the other. And when I actually sit them down and we take a look at consolidations, and I show them how important consolidations are and how you can trade those, both inside the consolidation range as well as to be able to flip your position. So in this case here, if we take a look at this consolidation inside the ES Mini, the 30-minute chart out here, knowing that price was pulling back down into the bottom of it, you could have taken a long position, a tight little stop, and if you would have saw price break that consolidation level, then boom, you're out of your long trade and you're into your short trade, assuming that you know what the size of the consolidation and the trade made sense to begin with from a reward to risk. Sometimes the consolidations are so small that it doesn't make sense to do that, but it helps you to identify what is then going to happen next in the marketplace. In this case here, as we take a look at consolidation, as I move this yellow box down to the bottom of the screen here, well, looks like I'm moving something more than that. I'll delete that now. Let's go ahead and move the yellow box down to the bottom of the screen. What we can see here is that the consolidation has been fulfilled this morning as we watch the ES Mini move down to a price point, get down to a low so far of 1594.25. I believe 1596 maybe was my mathematical projection because I was working at about a 9-point move out there. So as I said, equal to or greater than. Now what we want to wait and see is, are the bulls going to arrive? I believe that the bulls had such a nice day on Tuesday, Wednesday, and Thursday that they had heard that the bears came to work, that they were out on Rush Street, and they decided, you know what, they're going to go out there and they're going to have their little fun and they're going to party out here. And so now we're going to see if the bulls are actually going to come to work out here. If we had Darrell on the line, we'd be taking a look at, quite frankly, both the long and the short side of a Nadex trade here. What we can see is on the 30-minute chart, what price also did as it was completing that consolidation move to the downside, it was completing and it was getting into an oversold condition. Is this a place where you would go long? Absolutely not. Oh, I mean, you can do whatever you want to, but what you would want to do is you'd want to wait until you got some type of bullish candle signal out here. That might not come for a few hours. It may not come at all today. If we take a look at retracements here, so far what we're seeing in the market is, quite frankly, so here, grab hold of this comment. The Dow's off 122, and the S&P is down 10, and if the volume is light on the pullback here, this is actually a bullish move. How about that? How about swallow them apples out here? But we've got a market where right now I can tell you I am on the sidelines in the market. We have closed out all of our positions at this moment and just waiting for the next message from the markets. I'll describe to you why we have taken that position. But right now, a dead cat bounce of this Gartley sell pattern is $1,590. Haven't made it down there just yet. That would be, well, the normal move on this pullback here would take you to 1576 out here. A little bit disconcerting is certainly going to be IBM. We'll go back and we'll take a look at that because it's got volume and it's taking out Monday's lows, June 24th out there. So that is a sign of things to come eventually, and all that means is that, you know, we may see a market that moves up just a tad higher for the real sell cycle or the real sell pattern out here. So that's what the Dow being off 118 points right now. So far, the pullback on this move is pretty shallow, and that is something to be paying attention to. As we take a quick peek around here, we didn't look at bonds earlier or light sweet crude, so we're going to go ahead and do that. We're taking a look at bonds here, really just having a sideways move, trading a little bit lower this morning, but really just a sideways day out here. What's the trade here? You know, I say if you're going to go long bonds, you know, God bless you. And just be careful out here because it looks like the move in bonds is really just, you know, if you are long bonds, I hope that what you are is you're just playing a trade. And if you are long bonds in your portfolio, I hope that what you are doing is you're looking for ways to exit those trades. Or I sure as heck hope you've got some real nice interest rates. And so from a fixed income standpoint, that makes a lot of sense. Or what I really mean is I hope you never need to access that principal until that bond expires out there. Because it does look like bonds are setting up for lower prices out there. And I'm in the camp that Larry will not need his life preserver or Dramamine or anything else out there in the marketplace, Fed or no Fed out there. In any event, that's just my opinion. If we take a look at light sweet crude here, yeah, light sweet crude right now trading down 10 cents. Light sweet crude just simply does not want to get back inside this long-term descending price channel out here. It hasn't exactly broke out of it with conviction, but it just does not want to get back inside this price channel. It has tried really last week. This is a weekly chart that we're looking at. You can see here this week, and the trading session is not over, and it needs to truly break out. we'll know if this thing is going to break out. A close above 100.42, and yeah, you can start looking at taking the long side of the trade when it comes to light sweet crude, because you now have 1, 2, in essence 3 tests of this channel out here between the last 3 weeks on a weekly basis, and that means that we've seen many more tests of this level on the daily chart. This just goes back so far, meaning I go back all the way to 2008, that to really show you this downtrend channel on a daily chart, it just looks like gibberish out here. And other than speaking gibberish, I don't like to show gibberish on the charts. That is a light sweet crude. And none of this is gibberish talk, all these expansions and contractions. It's all good stuff. It's all great technical tools. And if you want another great technical tool, if you haven't yet gone over to the homepage of TFNN.com and downloaded the special report that I produced for you specifically, The Trend is Your Friend Until It Changes Out There, you want to make sure that you go out there and do that. So download it. It also gives you access to my daily newsletter service, Mastering Probability, which means you can sign up for it. There's no charge to your credit card. You get access to it for 2 weeks. I promise you, if you would like to learn, and here's the cool thing, because I've never done this, meaning that you've always had to put a credit card down, you've always had to put a payment down in order to make a deposit. I know just my experience in life is that when someone pays for it, they'll pay attention. That's why you pay for something out here. And so my concern is always that if you don't pay for something, you just won't pay attention, and it's no use for you. But if I could just teach you one thing, which I can teach you many more than one thing, would it be worthwhile for you to just sign up for the newsletter service? And even if you have been a subscriber at one point in time and you decline the service, or you just use it for those first 30 days, guess what? Because I've never done this, the newsletter, this special that's going on right now, it's applicable to everyone. So whether you've been a subscriber before or not, you can go access a ton of information. One of the pieces of information for us to really be paying attention to today is an extremely important trading session. Why? It's an extremely important trading session because of this. Because what we saw take place yesterday was we saw a little fumble by the Bears out here. The Bears gave the ball back to the Bulls, or the Bulls took control, however it is that you want to look at it. We had the oscillator, the McClellan, this is the New York Stock Exchange that we're looking at right now. We had the oscillator move above zero. That was coming from the extreme areas out here. Let me better this chart here. Okay. That was coming from the extreme areas, which it has tagged 3 times. Now, getting to these extreme areas back to 2001 have only occurred maybe about a handful of 15. Like I said, would be 3 handfuls of times out there. And we've seen 3 of them here. So you want to talk about volatility. We've seen 3 of them just in the last several weeks alone. Now, when you come off of those extreme oversold conditions, if you go back and you take a look at this here back in November of 2012, that's where we saw one. And as it got above zero, the zero line, I'll go ahead and draw that in on the chart out here. I can do that for you. We'll make this a black line out here. Can you see that? Maybe I need to make it a red line. I'll make it a red line. We're going to red line like we're revving our engines. I'll have that red line drawn in here when we get back from this first break. Right now, the Dow's off 106. S&P is down 8. And we'll be right back, folks.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Looks like a little short covering rally going on inside the silver marketplace here. You got silver up 50 cents right now, 50 cents trading out at $19.03, and gold staging a little bit of a comeback off only $10 right now, trading out at $12.01. We were taking a look at the New York Stock Exchange chart here before we went to break, and was really pointing out the importance here of today's trading session. Now, if the Dow closes back above 15,000 today, so we got a lot of time left in the trading session, the bulls will definitely they took control of the ball yesterday. And they did that by closing, by in essence, turning on the New York Stock Exchange. I'm just going to go take a look at that. I gave you numbers on the Dow. Just simply was easier for you to be able to follow that. Most people don't have the feed or take a look at the advanced decline line inside the New York Stock Exchange. I think it's a better way to get an idea of what's going on inside the market. And as we saw the market bounce the last couple of days, what we did see was wide breadth of the market out there, meaning a lot of advancing, net advancing issues over decliners was like 8-1, 9-1 each day. So that told you that even though the volume here on the move up has been light, there was a large participation inside the marketplace. In this case here, we saw the McClellan oscillator ever since the time frame of May 22nd. So on May 22nd out here, just to give you an idea of the signals that were available to you in the marketplace. Number one, we had a key reversal trading session. I'm going to go ahead and blow this up on the screen here. In fact, I'm going to get rid of the blue Gartley buy pattern, the first one that's set up. And I'm going to get rid of the Fibonacci numbers out there, and I'm going to get rid of the trend line. We can always, or the A to B equals CD down. So what I want to do is I'm going to take this back here. This is New York Stock Exchange that we're taking a look at. And this is the rising price channel that it's been traveling in since October of 2011. Now, a price channel different than a trend line. Channel lines, what we're using because, we've been taught this by our man Bud Rolfs, is to go out and make sure you're using a co-located open or close. Doesn't matter whether it's an open or close of a candle. Try to identify the most number of connections, largest number of connections, and that will help you to identify your channel out here. In this case here, as we take a look at the channel, and what's nice about it, once it establishes itself, price will typically ping-pong in between the high and the lows out there, and it really helps you. What it's going to really help you do, it's going to help you when you have fear out there. In this case here, there certainly is fear. There was fear in the market as the price was moving back in November of 2012. I can remember doing Tom's show. It was a day when I went long in the marketplace out there, and people got emails saying, "Are you nuts out there? How could you possibly be going long?" I mean, I had questions, people asking, the VIX wasn't doing anything. The VIX was low. The market was coming down. People were saying that means nobody is scared. My opinion of the VIX, another way to take a look at the VIX is also a tool for understanding liquidity. So market coming down and the VIX actually being low says that, there's a lot of liquidity in the marketplace as well. I don't think it just means that the market is complacent. I think there's more information out there than just that. So in any event here, we're taking a look at the price coming down into the price channel out here. Then what happens now, I'm going to blow this up as price moves up into the upper range of the price channel. It's moving to the upside here. You get a key reversal session. Well, what we also took, that was on May 22nd. And was a bearish engulfing, and it engulfed the prior 2 or 3 sessions out there. And when it did that, that was key reversal. Key reversal, you need 3 things. You need to be in an extended condition. Well, you are when you take a look at I don't have that on the chart here, but the relative strength, relative weakness indicator, that most certainly was in an extended condition out here. It was extended because you're up at the top of the rising price channel, and you need to close in the opposite direction of where price was coming from. We did that. And intraday, it needs to exceed the prior high and low. Well, we certainly did that during the trading session of May 22nd. But just as important on that day was when the oscillator dipped below 0. When the oscillator dips below 0 out here, boy, it is telling you that the bulls or the bears are losing control or have lost control of the ball out there. And isn't it, don't you want to understand, as far as the team is concerned, who has control of the market? Who, in this case here, was giving you a clear signal? Then what we saw they moved down in that oscillator down into an extreme reading, got down to a minus a minus 330 out there. Folks, you don't see minus 330 readings. Those are very extreme out here. I think at that stage, that was maybe about a dozen or so, 12, 13 or so since 2001. And what you typically, when you see that, it's an indication that the market is extremely oversold as well, and you should see a bounce. It's either going to be a bounce or it's going to be a significant bottom. Now, why was this not going to be a bottom out here? Well, the oscillator never made it above 0. It traveled. It got very close to that level right here on the day of, what was that? That was June the 18th out there. I believe that was the day that we went ahead in the newsletter and we went short on June 18th because our back was up against the wall and the summation index just above it was still pointing down. Yesterday, the move in the markets got it back up above 0. If today we get the negative close that we have right now, that's a very bearish outcome. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 86 right now, trading at 14,938. So the key number here is 15,000. The Dow closes back above 15,000 today, and it's just a confirmation that they took over the ball from the Bears yesterday, and that we will see a move to the next level. That's where we'll start taking a look at selling the market. Now, I've got IBM up on my screen. If it closed out here right now, it's trading at, looks like about 190.86. It's actually forming a hammer candle here as it's coming into this high volume downdraft area back on April the 22nd. Now, this is not one of those hammer candles that you necessarily like to buy out here, and the reason is because you really need to take into consideration the day before. In this case here, we have a gap down, and so even though that's a hammer, as we take a look at it right now, and it's helpful to identify areas of support that are holding, and the volume so far has been pretty strong. You had 3.2 million shares in 1 hour of trading going against the downdraft that had 18 million shares out there. So pressure is absolutely to the downside inside of IBM out here, the number one weighting. But the reason why you don't really want to buy into this hammer, at least I wouldn't, is because you really need to always consider the trading session before. You don't know where you're coming from. You don't know where you're going to, I should say, unless you know where you're coming from. And what that means out here, that means that you really want to be paying attention. In this case here, you had IBM closed yesterday out at 195.65, and I'm going to use this little tool here. I've got to color it in. What happened there? I didn't want to do that. Let me try drawing it off to the side here. I did this once before for you. We're going to draw that. We'll draw it like that. Golly. Okay, there we go. It's going to be, it's not exactly what I wanted to do, but you'll get the picture here. So now all I'm doing, I'm just filling this area in. I'm going from yesterday's close to right here. And yeah, I mean, the bar is pretty big. But if you looked at that right there, is that a hammer candle? And the answer is positively, absolutely not. That's not a hammer candle. So you want to make sure that you are paying attention to these gap down areas. And you want to make sure that you fill them in. I say just color them in on the chart, you know, so that your eyes can visually be able to pick that up. So that doesn't mean that you don't have bulls defending the position, but it's not a buyable hammer, in my opinion. Let's go to Odessa, down the street to Don. Don, thanks for calling. Thanks for holding. How are you this morning?
Hey, Steve, thanks for taking my call.
My pleasure.
I'm doing just fine. I hope you are, too.
I am. And you wanted to look at the spies? Tell me what you're doing, what you're thinking, how I can help you.
Well, I'm trying to learn this Gartley business before I go sign up for that software.
Okay.
I got we can do a weekly of the SPY, I guess. And I started my X point, and this would be what I'm looking for here is a bullish Gartley.
Okay.
I started my X point at, what is that date there? That date.
Maybe January 4th?
No.
No. Okay.
This is a shorter one. 4/18/13.
4/18. Okay, that's fine.
Okay, and my A point would be the high, 169.07.
Yeah.
And then the B point would be down here at
June 7th.
June 6th I've got on my chart.
Okay.
Then the C point would be the high.
Are you looking at a weekly chart? Is that what you have, or are you looking at...
I have both up.
Okay. All right.
I'm giving you the individual dates because my weeklies don't have the right dates on them.
Okay.
The 19th of June would be the C.
Yeah.
And then that low down there would be the D. Is that a valid bullish Gartley?
It is. So are you making the trade off of the weekly or the daily? What would be...
I would be making, if I was to, I don't have this trade, but if I was, I would be making it off the weekly.
Off the weekly. Okay, so if we do take a look at the weekly, it is a valid. I'm going to switch over to the daily because what you really picked up there. So I would pick up that as a Gartley pattern off of the daily chart. On the weekly, I'm going to give you some different swing points. Now, on the daily, it's very clear that the April 18th or April 19th area is your X point. And so, to me, that's very clear. Now, it did a little bit over a .786, but we're using .786 and .618 really as your guideline, not as it has to be. What the has to be inside any move, and I'll go ahead and erase this off of the daily chart on my screen here, the has to occur is you need to have an A to B equals CD. If you went and bought H.M. Gartley's book, in fact, you can download it, which is a great reference material. Gartley, what it needs is it needs an A to B equals CD down. He was not using Fibonacci numbers when he put his book together.
The equal don't never equal, though.
What's
confusing to me. The equals never equal.
The equals, you mean the A to B equals CD?
Yeah, they're not exactly always the same.
That's right, because perfection doesn't exist. It's the lowest standard, and you do not want to strive for perfection out there. You just don't want to do it. You're using that, what you're doing, Don, is you're using that as your guideline for the range. And now sometimes they do work out. You will find if you trade them enough, you will see they'll come in almost really to the tick, especially on an intraday chart. But what you're doing is you're looking for a range, and then you're looking for a bullish candle. In this case here, you would be looking for a bullish reversal candle.
We don't have one here, do we?
No, we really don't on the daily. The bullish reversal candle that you would come up with on this would be using a blended technique. But here's the other problem you have on the daily chart, and is why I'm neutral at the moment. And the reason is this, because when on any pattern, see the Gartley pattern, Don, what it's doing is it's giving you an entry point, either to go long or to go short.
Then you got to look for the bullish signal.
Well, then you have to look for the bullish signal in order to take the long. But what you even have to do even before that shows up is you have to identify where is your resistance at. Do you have any clear resistance? And if you do, then you really need to take a look at the reward to risk. And in this case here, in the SPYs, because it's a great one to take a look at in trade, you clearly have resistance at this downdraft session from June 20th.
Yeah, I see that.
Okay, and you've got volume there of 321 million shares. So even though we don't have an individual bullish candle out here, what you can then go back to is just use the old supply and demand. And, you know, is volume increasing on the way up? And on June 25th, you had 162 million. Then you have 134 on June 26th. Then yesterday you have 129. That's not good supply and demand.
So we have what appears to be a bullish Gartley here, but it's not confirmed with any. We've punked out at the resistance, and we don't have a bullish sign.
That's right.
Okay.
So now the next bullish sign here potentially could come like this. Let's say we have the pullback today. Let's say the market closes awful, and what you would be taking a look at on the daily SPY, but volume actually starts coming back light. The normal pullback off of yesterday's high would take you into on the SPY would take you right around the 158-ish range out there. So if it comes back and it pulls back to the 158-ish range, what it will actually do, it will set up another A to B equals CD. I'll go ahead and draw that in on the chart here. So it would draw up an A to B equals CD that would probably look like this. So if it comes back on lighter volume and then goes up with stronger volume, what it will do is it will go ahead and close the gap. And what it really will be doing out here, it will be setting up the next Gartley sell pattern on the daily chart. Now, if I switch over to that's one possible pattern, that's out there. We won't know until we actually see it play out. But the cool thing about these Gartley patterns, buy or sell, are that in advance you can draw them, so that you're sitting there trying to identify what may happen in the marketplace. Now, this market can continue to move up on lighter volume. But so long as it does that, and even though the bulls have, in essence, taken charge of the ball as of yesterday, we'll see how today's trading session plays out here. What that really says to me from a volume standpoint is that the trend being your friend, the trend is still down. So the longer-term trend right now is still, not longer-term, the intermediate-term trend, the weekly trend is still on the upside. But we're in that 6-month unseasonal cycle out here. And I don't think that the bottom has been put in just yet. We've got too much volume down here on that trading session from June 24th. And on June 24th, the other giveaway, June 24th, you had 222 million shares driving down into the swing point from April 18th, your X point where you started from. And that had 167 million shares. So you're driving into a swing point with volume then going up on light volume. It says you're going to at least go down and test April 18th. At a minimum, that's the work. Now, I'll switch over to the weekly for you real quickly here. And on a weekly basis, that's a monthly, you didn't want that. On a weekly basis, what I would have used here is I would have really used for my X point is I would be using the swing point from November 16, 2012. I would use that, or I would have used the swing point maybe from January 4th. Those would be the two areas.
Would that be because that's at the bottom of a channel?
It's where you really had a defined downtrend. So November, we know we went from the highs in September 14th of 2012, and then you went, you had a move down. The one that you're looking at on the weekly basis, trying to use a swing point from April,
consolidation point.
Yeah, really a sideways move. So you're looking for something, and when I look at it visually, I'm looking for where I see a real change in trend take place. There wasn't really a significant, on the weekly chart, there wasn't really a change in trend at that point on the weekly chart. So that's the only reason. Now, what you like is on the daily chart, you like to match these things up. The question is coming off of either November 16th or the trading session or the session from January 4th, as you like to still see what the retracement levels are. In this case here, the .382 retracement level was 155.94, and on that move down this week, it got down to 155.73. So that also tells you, if you only do a .382 retracement, you still have a strong trending market, to the upside here. It just hasn't had the volume the last couple of trading sessions, so I'm not so eager to jump in on the long side. But look, I continue to watch yesterday's move in the markets because of what happened inside the New York Stock Exchange. Just says you've got to be aware that it's a possibility.
Thank you so much, Steve. You helped me really gel some points here in my own mind. I really appreciate it.
Hey, my pleasure, and thanks so much for calling.
Bye-bye.
All right. Let's go out to Orlando to our man, Rich. Rich, thanks for calling. Thanks for holding. How are you this morning?
Doing pretty good, Steve. How about yourself?
I'm doing excellent. Excellent.
Good. Ready for the weekend.
Okay, yeah. You wanted to
never met a weekend I didn't like.
You bet. Never met a day I didn't like out there.
Well, that's true, too. I agree.
Even if it rains, although I hate the rain out there, but sometimes, it's an opportunity just to kind of...
you need it. You need it sometimes.
Yeah, and it's got to make things grow, so getting some water thrown on you. Heck, and when you win a championship, they usually throw the water on you, right?
That's right. There you go. That's what they do.
Yeah, so you just take a look. So when you want to win the championship, I say just go outside and let it rain on you.
Let it rain on you. There you go.
You want to look at the ERY. Now, is that the direction energy?
Yeah. Well, what it was kind of tossing between the FAZ and the ERY. They're both short, short positions, triple X, triple bear.
Yes.
One is the financial, one is the energy.
Okay.
And it's like a question as to, again, looking for still one more leg, at least one more leg down.
Yes.
It's like it looks like we had some power off the bottom. It looks like the retrenchment is with lighter volume. And it's a question as to, one, is that the right read? And two, out of these two, which one looks more promising?
I like the energy sector. Now, in trading the ERY, one of the things that I think is a must for you is going and taking a look at ExxonMobil. So let's go do that. And the reason is because I'm pretty sure the ERY is going to be traded off of the XLE. And that being the case, ExxonMobil is like 30 or 40% of the energy of the XLE out there.
Even with the ExxonMobil, we got a high volume bottom there with that $88. I mean, that about 5 days ago.
Okay.
And it looks like it's pushing down.
Yes. Inside ExxonMobil, if we take a look at it and take a look at its bounce here. Let me just erase a number of things off the chart here. We're just going to clean this up for you. So we're going to take a look at ExxonMobil first, and we're doing this, folks, just simply because of the weighting structure inside of the energy sector that Exxon has. Boy, I really butchered that, but that's okay. You know what I meant. So as we take a look at it, this year on its bounce up off the last couple of days, up with 15.7 million, then 14 million, and then 12 million yesterday, going into the downdraft that had 21 million shares. So that area has acted as resistance for sure. But I think that, with the market still really won't know till today. Today I would say, Rich, that if the Dow closes above 15,000, to me it's clear that the markets want to push a little bit higher, and your entry into ERY would be at a higher price. That higher price, if we go from just simply the May 22nd high down to the low that was put in on Monday, it's going to be your 618 retracement level. Or it's at least going to be the top of the gap from June 19th. But I suspect it would really be what could take place today is you could be forming an A to B equals C to F. Today's going to be a light volume, day. It should be a light volume day. And so the pattern could actually look more like this, which would say it would be your 786 level. And that would set up your Gartley, sell pattern. In fact, I should be able to draw this in here because of today's move down so far, and it would look just like that. And so if I go ahead and I get rid of the formation tool, the last thing that we're going to do, so I'm going to give you a range here to be watching. Now, this is on ExxonMobil, but that's okay because I think you still want to watch ExxonMobil. So if the market rebounds today and closes positively, the bulls are trying to do everything that they can here right now, that this could set up an A to B equals CD that would take you into about 92.33 out there. And if volume, and that would be ideal because if volume is light coming in there, you're looking at the swing point from June 19th, so light means less than 14 million shares. If it does that, and in fact what it would do is it would be trading into the May 22nd level, which also has 19 million shares. If it's coming in light there, that's telling you that is, that's the time to go ahead and fire away. Now, the pattern doesn't have to complete like this, but, it's what we look at here at the moment. If you're saying that you're going to go short today, can you hang on through this break?
Sure, absolutely.
Okay, so we come back. We're going to go back to Rich in Orlando. We are dissecting and bisecting the energy sector, the XLE. He's taking a look at a trade in the ERY. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi folks, I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow off 63 right now. You got the Nasdaq Composite almost green here off 68 pennies. The Nasdaq 100 is actually green out here, up $1.35. We're going back out to Orlando and speaking with Rich. We're taking a look at really the energy sector. So we're bisecting the energy sector. So the first question, Rich, that you asked me was, would I take a look at the financials or the energy sector as a place to put on a short? Right? That was really
correct. That
okay.
was the original question.
Okay.
Right.
So here's kind of like a step process that I would go through. Number one, I'd first go take a look at the SPY and see what the SPY is doing. Well, if we take a look at yesterday in the SPY made it back or close to the top of the downdraft from June 20th. So June 20th, I'd write that down on a pad of paper out there. You know, that high was 162.10. Yesterday, it got up to 161.82. Then I'd go into the sectors because you're taking a look at two sectors within inside the S&P 500. So now as we go into those sectors out here, Where is it? There we go. We're going to take a look at the energy sector. The energy sector yesterday was not able to get all the way up to the June 20th high. That level was 79.75. It only made it up to a level of 79.34. So it couldn't make it all the way up there. If we go take a look at the XLF, the financial sector, and see what it did, give me a moment here to put this up on the screen. This made it above that June 20th area. So June 20th here, it actually went ahead and tried to close the gap. It got up to the low of June 19th. So to me, that says the financial sector, just by using the same basis and follow through, financial sector is stronger than the energy sector is inside the S&P 500. So if you are looking for a short, I would go with the weak hands, not the strong hands.
Correct. I agree.
Okay, so then that says, okay, we just focus on the energy sector, and what you really need to do is really focus probably on the stronger sector within inside the S&P and the S&P itself before you would pull the trigger on the weak sector. So your signal will come from when the strong sectors say, okay, it's over, the patterns are done. Does that make sense?
It does. Other than how would you're looking for what, a sell-off in the financial section, or
no? I would be looking. Well, I'd look for a pattern to complete out here. In the case of the financials, it could be an A to B equals CD. It could be a test of this May 22nd swing point. Let's say that because the bulls took charge yesterday, and let's say that the Dow closes above 15,000. If in fact those two things happen, I can guarantee you the bulls have control of the ball. No question about it when it comes to technical analysis. And that says that the financials could actually move up to $20.36. That would really be a test of the May 22nd high, which is $20.35 out there. So that's where your signal would really come. Now, I'm not saying you just necessarily pay attention to the XLF, because you could go take a look at what might be the strongest sector out there, and it might be the XLP. You know, another weak sector is the XLP. I would just take a look at each of those sectors, but I think that your signal for weakness will come from the strong hands when they have finally given up.
So if you get a move up to the upside in terms of the ERY again, you'd be looking for closing that gap underneath, like the 28 and 28.5 or so?
No telling where the weak hands will be able to get to. You know, that's the problem. May not have enough strength to really complete a pattern. So I think that I would be looking for the signal more off of the XLE or the strong sectors in there than I would be trying to figure it out on the ERY. I would trade the ERY off of the other two ETFs out there. Inside the XLE, we ran out of time, and I'm sorry about that. But I would say probably what you're looking at is you're probably looking for a test of the bottom of June 19th out there at about $80.69. It's somewhere right in around that range. All right, Rich?
All right.
Hey, have a great weekend. Everybody else out there, you have a great weekend as well. Look forward to seeing you Monday morning. Take care, folks.